Hello guys, welcome back to another daily market review. Today is July 10. So today we had a trending New York session, um, which is quite interesting to watch, to be honest with you, just ahead of CPI, which will be tomorrow. But it's what it is, and if market is bullish, it's bullish. If it's in a pullback, it's in a pullback. And I mentioned that on Sunday that I'm not expecting any major pullbacks. Meaning, I think I've also said like every lower time frame sell side rate needs to be looked at as a manipulation. So if you see an SMT divergence after a sell side rate on let's say 1 minute, that should be a great buy. So that's what we've been having for the whole week so far. But let's dive in what happened in New York session. So this is the New York session I annotated before I started the stream. I'm looking at it on the 1 minute and see what happened. I'm gonna see what happened in a minute. So before New York opened, we had a sell day yesterday, and the whole overnight session was basically an expansion higher, and we had a buy side at 20,771. So before New York open, I'm gonna delete these. It was very close to that buy side, but it didn't take it out. I'm gonna go back on ES as well. 930, 930, 930 right here. All right. So here what happened is I'm looking at this rally, and we don't have a meaningful pullback over there at all. So by looking at that, you can actually anticipate a Judas swing sell side delivery, right? Because it lacks a pullback. So here we have these lows right here. I think that should be an SMT divergence. Might be wrong, but yeah, it is an SMT divergence, meaning that is the last pullback or last manipulation. So you need to anchor your dealing range at those lows all the way to the high and expect a pullback into the range equilibrium. So at open, that is what happened. Pullback low, SMT low, all the way to the high at New York open. And you can see the Judas swing at open and how it comes down into discount. Here, if I zoom in, I think we can find some sort of PD arrays. There's here the fair value gap, or trap fair value gap rather. The lower one, I think that was the one that got tagged. Let's see. Let's extend it to the right. Yep, that one. And the bodies are respecting that fair value gap, which send the price to its buy side objective at New York open within the first 15 minutes. But the reversal here at the sell side, what's more important is, I think, yeah, we have a bearish SMT here. Bullish SMT here, which means this is a 1 minute sell model. Okay, the pullback on a higher time frame is a lower time frame sell model. Sell model is completed, sell side is taken out. Now you can wait for reversal, bullish SMT divergence to go long. So here we have the V shape. Let's zoom in. We had a V-shaped reversal or rejection. Manipulation took place already. Market took the sell side, and then it displaced. So in that displacement, there should be a bullish SMT divergence. Let's take a look at it. Right here, I would say, yep. I mean, you can consider this too, but because it's not a swing low on ES, I'm not gonna take that. I'm gonna take this one instead. It formed a bullish SMT with equals being on ES, and market ran for the highs. Now at this high, what you can do is you can anticipate a dealing range, SMT being the range EQ from the low. Now I'm anticipating that bodies, because it's smooth edge, being the range equilibrium. So if you take a look at the high of that dealing range, you get the reversal level. Here, what happened was market literally formed a bearish SMT there, and it went for sell sign here and here. So this is the first sell sign, high probability sell sign, and this is the other one, and we have range equilibrium from the low. This is the V shape all the way to the high, and the CE of that rejection, it's the C of that dealing range premium. This is the last premium fair value gap. In that leg though, you don't have to have a bearish divergence again, because it already manipulated up here. Be careful with that, okay? It doesn't have to diverge along the way because it already manipulated. So this is the premium fair value gap after breaking down below the range EQ. It went for the sell side. Now that sell side also was bought up, but at the time obviously you wouldn't know that. Here what you need to wait for is how it reacts, how market moves after sell side is being taken. Now both assets took the sell side. There's no divergence there on a higher time frame, but after that there's a V shape, equal lows on Nasdaq, and lower high on ES. That is the first S&T divergence. Send price higher, it expanded. Now we have a displacement, and we have a new dealing range because the sell side is taken. Now you can look at this one right here, because that's the new sell side. The buy side is still the same. It comes down to range EQ. Also, just note how it knocked out the range equilibrium on the way up. Basically delivers one-sidedly and energetically. Range EQ retest, that was a divergence in between assets. Again, this is the second divergence, which is indicating what? It is indicating that market is not done yet. We are still in buy model. The reason this is important is because it is forming at range EQ. It could have been below range EQ, that would have been even better. So this is the range EQ, the bullish S&T market displaced the first fair value gap after the S&T and sent it higher. So in that leg, it never pulled back. Here, let's read it all together. I'm watching both assets, looking for potential divergences. There's a divergence here. It diverged along the way, right there. Now we have a new potential low. Once high is set, we're up here. You can look at that dealing range. It didn't retrace enough. But what happened was, as I was live streaming here, it actually formed three drives and sent it higher. And this low, the third low, was was range EQ on ES right here. It was range EQ on ES, discount fair value gap, or volume imbalance, and rallied basically one step for life on ES. It's not on Nasdaq. Nasdaq stayed stronger, accumulated during silver bullet, rallied one more time. Now we have a new dealing range from 3 drives low all the way to the high, to the new high. We have this dealing range. Let me pull up ES as well. Here we have sell sign at range EQ. This is, I think it was S&T, yes, right here, which is the 1 minute sell sign. So market formed bearish S&T at the highs, basically formed a power 3, broke down. Now you have a new dealing range here, which didn't deliver premium fair value gap. Broke down, took the sell side. Now it accumulated a little bit. Let's delete that. It accumulated a little bit. Oh, come on. Below Ibisi. I'm sorry, Sibi. Which means we have now trap positions. Here becomes a trap or smart money reversal. In that case, it also formed. Let's clean all that. Trapped shorts, basically late shorts got knocked out there, and it formed bullish S&T. I believe it was this one or that one. Wait, which one is it? Here. Right there. bullish SMT formed, the first fair value gap, low risk buy, expansion, IFED. Now you can use the new dealing range also because it's in the buy model. You can use this and take longs below range EQ. This is the one set up for life basically. Rally, retest of the range EQ and rallied and closed the market there. Now the most important thing about this price action was the whole price action today was it was very strong. Like as you can see, it never pulled back. It was just delivered one-sided, and if you missed this long or close your position early, you know, you still made your money, but it's what it is. Usually pullbacks in bull market or trending market looks like this: lower time frame, sell side, gets tagged, basically being manipulated. Afterwards forms small money reversal or SMT divergence and rallies. Same deal here. The first pullback below sell side, SMT divergence, rally. So until that SMT forms, you technically don't know whether the sell side delivery or sell side rate will become a manipulation or not. However, there are ways to anticipate that prior. For example, here on the last pullback, this is the sell side because that's the SMT low. This is basically 1 minute sell side. If you look at this candle lacks manipulation. Okay, this is also the hourly open at 3 o'clock candle. It lacks manipulation, so the odds are against sell side, and this once the sell side raid completes, if it forms a bullish SMT, which means the market is in buy model or buy in buy model algorithmically speaking, it is likely to be going for the buy side, basically once out for life, and you can anticipate the sell side rate being a manipulation. So you look for entries below that sell side preferably. Now that's more advanced, but you can always use the fair value gaps. Wait for displacement, long that, once out for life, you target the buy side. 30 points, easy. Alright. So tomorrow CPI 8:30. It's going to be an eventful day in my opinion. We're leaving a lot of sell sides, but again, there's no reason to fade the market. If it's going to deliver some major sell side, I mean not major, but like higher time frame sell sides or like 5 minute, 15 minute or hourly sell side, it needs to consolidate first. Okay, so if it doesn't consolidate and goes for the sell side first, I think tomorrow will be a reversal day after CPI. But if it forms a big up candle, depends on how it delivers afterwards before New York Open, we can see a continuation. So that being said, have a great day guys, have a wonderful evening. I'll see you guys and I'll talk to you guys tomorrow at 9:30 as usual. Have a great day.